If you've been telling yourself, I want to invest in real estate, this is the moment you stop scrolling and start building a real plan. Because there's a massive difference between interest and execution. And this year, we're going to move from someday to strategy. So in this video, I'm going to give you a 90-day real estate investment plan, one that works in Montreal and across Quebec. Whether you're buying your first duplex, looking for a cash flowing triplex, or searching for an up-and-coming condo to rent long-term, this is how we build structure that gets you in the game without guessing and without gambling. I'm Aguinaga, your Montreal real estate broker and investor and property manager. Over the last 17 years, I've worked with hundreds of investors, some first-timers, some seasoned, and what I've learned is that no two portfolios are the same, but every serious investor has a defined process. Today, I'm going to walk you through how we build that process with new investor clients so they can go from planning to offer ready in under 90 days. Every single investor starts with the same problem. Too many listings, not enough clarity. You can't look at everything, and you shouldn't. So the very first thing we do is build what we call your deal box. That's your personal investment filter, and it includes 3 decisions. What kind of property we're looking for, where you're looking for it, and how much risk or renovation work you're truly ready to take on. So, let's say you think you want a triplex. Great! We'll look at active inventory, recent rents, and turnover cycles in neighborhoods like Verdun, Rosemont, or even parts of Laval. But if your budget says $500,000 and the triplexes you want are $725,000 and up, we shift the asset, not the goal. Same thing for reno projects. Some buyers are ready for heavy capex, some aren't. There's no wrong answer, but you need to be honest about what your timeline and cash flow can support. This step, building the deal box, is what helps us say yes or no to a property in seconds. No guessing, just focus. Once we've defined what kind of property you're buying, the next step is figuring out how you're going to pay for it and how the numbers actually work. We start by confirming your pre-approval, of course, but more importantly, we look at what kind of down payment structure you're working with. Are you going the 5% route on an owner-occupied duplex? Do you need 20% down for a pure investment property? Are you partnering with someone? Are you leveraging equity? We'll walk through how to structure your mortgage based on today's rates, your monthly goals, and how much room you want to leave in case expenses jump or rent is delayed. Because real estate investing is about cash flow and staying power. This is also where we build your timeline model. Maybe you're buying for long-term appreciation, or you're trying to BRRRR and refinance in 12 to 18 months. We'll shape your criteria around the goal and avoid properties that break the model. This step is critical. It's not just about whether you can get financing, it's about whether the financing leads to a smart hold. Next, we build your personal underwriting sheet. It's a simple spreadsheet, but it's powerful because it lets you look at any deal and immediately see if it works. We plug in the gross rents, factor in your operating costs like taxes, insurance, snow removal, maintenance, and we test the numbers at different interest rates so you can see what happens if borrowing costs change. We also look at what your cash-on-cash return might be, whether you're buying with 5%, 10%, or 20% down. And we model stress tests. What happens if your rents drop? What happens if you have a vacancy or if you need a $12,000 roof job? That's not fear, it's foresight. And once you've run these numbers 4 to 5 times, you'll start to see the patterns. You'll recognize deals that look shiny but don't perform, and you'll spot quiet winners that others miss. Now, let's talk about where most beginner investors slip. Quebec has its own rules. If you're buying a plex here with tenants in place, you're not just buying a property, you're stepping into an existing lease structure with laws that protect the tenants. That means you can't just raise the rent, renovate at will, or move in whenever you want. If you don't understand that, your plan will fall apart fast. We'll show you how to review existing leases, how to respect legal notice periods, and how to plan any renovation or re-lease strategy around what's allowed. This protects your timeline and your reputation as a landlord. Then there's access. You can't just bring in a contractor or inspector without proper notice, so we prep your inspection timeline ahead of time so there are no surprises and no delays. We also check the certificate of location early. Most older triplexes and duplexes have outdated ones, which need to be replaced before the notary can close. If we don't catch this in time, it can delay your entire deal by weeks, so we plan for it up front. And if you're buying a condo as an investment, you need to dig into the building's documents, like the reserve fund, the declaration, the board minutes, because a low price on a condo means nothing if the building's finances are a mess. That special assessment, it's coming from your rental income. This section is about protection. We make sure you walk into your investment with your eyes open and your paperwork ready. Once the foundation is in place, we move to live showings. We schedule at least 2 private tour windows across the next 4 to 6 weeks. That might mean seeing 3 properties in January, then another 3 or 4 in early February. Why this step matters. Even if you don't write any offer yet, these walkthroughs sharpen your instincts fast. You'll start seeing what photos hide. You'll learn what bad renovations look like in real life. And you'll feel the difference between cosmetic and structural issues. And if something fits your deal box, you're ready. Your deposit is lined up, your financing is prepared, and we can write a clean, respectful offer that speaks directly to what the sellers want to see. At that point, you're not just prepared, you're positioned. One bonus insight for new investors: you don't need to go it alone. We help clients vet potential partnerships, whether it's family, friends, or capital partners, with clear legal structure and role definitions. And more importantly, we plug you into our team of mortgage brokers, inspectors, notaries, property managers, trades for capex estimates. Real estate is a team sport, and the faster you get plugged in, the less guesswork you'll face at every step. Here's the truth most people don't say out loud. You can read, listen, and watch all of the content in the world. But until you take action, nothing changes. This plan works because it takes you from theory to motion. You define what you're looking for. You build your financial framework. You underwrite real deals. You see real properties. And you move with confidence when the right one shows up. This isn't a shortcut. It's a structure that works. If you're ready to stop browsing and start building, let's talk. Book a 15-minute investor strategy call with me. We'll go over your investment goals, your capital access, and your timeline. I'll show you how to shape your deal box, get lender ready, and take your first tour within the next month. The link is down in the description below. By March, you'll know if you're writing or walking away from deals for the right reasons. Either way, you'll know more than 90% of new investors out there. And that's how wealth starts, with knowledge and action. If you found this helpful, hit the like button and subscribe. I've got more investor strategy episodes coming. Thanks for watching, and I'll see you on your first showing.